Oh, I like this. It says rant. This is from Greenstone Ranch. Rant! My business income is almost entirely being diverted to pay taxes. My side business income is almost exclusively being used to pay taxes this year. So I'm working to just pay taxes in order to potentially keep some money in 2026. I got surprised by taxes this year, 2024, and have to set aside all the income I've earned so far to pay my tax bill. Having realized I will have a similar obligation next year, next filing year, the next 5 months will be set aside to pay that. I'll be keeping 2/3 of my business income for myself. Feeling frustrated, knowing all my work is going to Uncle Sam account. That was my first question. Where are you? Now we know he's in the United States. If all of your business tax is going, if all your business income is going to taxes, then you have other income. It's the only way. You have other income.
Tax is a percentage.
Yeah,
right.
It's not, and not 100.
No, it's not 100%, right? Like, and I get it. You're talking to a libertarian. Like, taxation is theft.
You're talking to two libertarians,
right? Taxation is theft, right? Like, we all get it. But at the end of the day, it's always a percentage, right? Even if you're in the top tax bracket with no deductions, none of it, the most I think you can pay, what is 38%?
Oh, yeah. Well, sometimes a little bit more. It depends.
So call it 40%.
Yeah.
That still means that $6 out of every $10 goes into your pocket.
Yep.
Right. And if you are working off to pay off a tax bill, that just means you didn't put money aside for the taxes that you knew you were going to have to pay. Like, that's not that being broken or your business not working. And the fact you don't pay taxes unless you're making money. So like, I am totally confused by this situation, because if your tax bill is that high, that means you've put some money aside. Yeah, you should have put some money aside.
I see two things here, two possibilities. Number one is what I said earlier. You're talking about, you have a side hustle and you have your main source of income, which is either a job or another business, and you're not paying enough tax over here. So everything you're doing in the side hustle gets swallowed up by the tax bill.
Because it's combined income.
Okay, sure. I get it.
You're still getting the money.
You're getting the money, exactly. If you didn't have the side hustle, you still have to pay the tax, right? Number two, you have a terrible accountant. And let me tell you something. That is a thing that I see so many times each year. I see people come in with, oh, we have this business, we've been around for a while, and I'm looking at their records for whatever reason, and it's like, why did you pay this? Well, that's what our accountant said. And then I call my guys, I'm like, I want to double check something. They're like, why would you ever do that?
Right.
And then
the thing is,
it's just, sometimes you get really, really bad tax advice.
The very first time you get a tax bill, the only words you should hear from your accountant is, next year, we need to come up with a tax strategy.
Yeah.
Right? We need to do tax planning. If your accountant is not saying those words to you after you get a tax bill that you feel uncomfortable with, then you have the wrong accountant.
Yeah.
Like, that's just as simple as it gets.
Yeah, it is. And again, I'm assuming our first, what the first thing we said is what we think is going on here. He's got extra, because he did say side business. He's got extra income somewhere else. And he's upset that the side business is being swallowed up by the tax bill. But if you didn't have the side business, you would still have the tax bill. You got to come up with that money somewhere.
So
it also means that whatever is going on with the main income, you're not paying enough money each year. Each paycheck or quarter or whatever it is.
You may have hit your side income may swap you from one tax bracket to another.
And that's a possibility as well. That's right. Yeah, people don't understand that sometimes. Where I've seen reports on people turning down promotions and salary increases because they're going to make $5,000 or $10,000 more a year, but it puts them into an extra tax bracket where they're going to pay an extra 2 or 3%.
Correct. And
which reduces or actually increases their tax bill by $8,000 or $10,000.
And that if you're filing together, that doesn't only affect your income, it can affect both of yours.
Right, exactly.
Right? So it's the tax bill across the board.
It's a strategy, man. And like you said earlier, your accountant should be talking to you about tax planning, tax strategy. And if they're not, go get a different accountant. And I'll bet you more than anything, this person just uses like Like I'm
H&R Block.
one of those, yeah, one of those tax companies
One
or
of those.
something like that.
If they have a desk at Walmart, they're probably not the ones you want to talk to.
Right, exactly.
I'm just saying. Like, I don't care who it is.
Not for tax strategy. If you
Yeah.
just have a W-2, go
Oh,
to
yeah.
them all day long.
Yep.
They're great. They will help you out. You'll be fine. But if you are a business, multiple businesses,
Mhm.
and you got to strategize, they're not the company to help
No.
you with that.
Nope, they don't know how to move money around like that.
Or quite frankly, that's not what they're there for anyway.
Correct.
They're not there to strategize. They're there to take your W-2 and say, all right, here's how much you're getting back. Good luck. Because that's 95% of the people.
Yeah.
Right?
It is.
So, all right. So Green Stone Ranch, I'm curious if there's any comments here that are interesting.
First, you should only be paying taxes on your profits. Right.
Yeah,
You should be
well,
keeping at
true.
least 60%, right?
Oh,
like,
at least, if not more.
yeah, what this guy said.
Oh, man.
Wait, if I spend all my profit, I don't have to pay taxes on it. That is correct. Because
Whoa,
if you,
whoa,
if
hold
you
on.
spend your profit on deductible items,
Then it's not profit.
correct. So you're
It's
spending,
expense.
correct. You're spending your profit on legitimate expenses.
Yeah.
You have no profit. There is
Right.
nothing to tax.
Right.
Why do you think at the end of the year, the giant Mercedes is the best-selling car every year for business owners?
I imagine there's a tax advantages to doing
Yes,
so.
because it goes over a certain weight limit,
right.
and
And you can
trucks
buy
of
it.
that size. So you could go buy a $220,000 Mercedes or whatever it is, and you can take it as one single expense, therefore reducing your tax burden that year. Right? Then if
Yep.
you sell it the following year,
Yep.
and you take a 30% loss, yes, you have to take the difference, but the 30% loss now also goes on your books as a loss.
Right.
Like this is like tax strategy. This is figuring this stuff out.
Yeah, you need. I would suggest.
Like
Well, it's in April 6th. Yeah, I would highly suggest in the next few months, give the accountant some time to get through tax season. It's almost over. Technically, it's over, but they're still going to be dealing with late returns. Give the accountants a couple of months to get through tax season, and then I would say by June at the latest, start talking to an accountant, like an actual CPA, about your planning strategy.
Like my CPA, we're already having conversations, not about the tax return we're filing in 2026, but the one we're going to be filing in 2027. Like this year, we already have expected profit margins.
Right.
We have all this stuff laid out for this year. So like, if I want to reduce my tax burden this year, we're going to have to make some capital investments this year, right? Like, and we're in what? April?
Yeah.
So I have 9
Quarter of
months.
the year's gone.
Correct. Right. But that still gives me 9 months to figure out, like, do I buy a new piece of equipment? Do I upgrade my car? Do I go lease a car? Like, because otherwise Uncle Sam is taking a percentage of whatever that is, right?
Yep.
So do I want to spend that money in my local economy? So one of the things I'm a huge fan of is buying stuff like this.
Yeah.
Right. Like my local,
Marketing, yeah.
my local promo guy, this is all 100% deductible, right? The only clothing that is actually deductible and can be expensed
Yep.
is if it has a logo on
Or
it.
uniforms.
Or uniforms, right? So like there's a company in Denmark called Tuborg. Do you know?
No.
They're a beer company.
Okay.
So
Oh, you think I would know that?
yeah, it's Carlsberg and Tuborg are the two
I know
big Danish.
Carlsberg.
Yeah, so Tuborg is the Danish
Okay.
equivalent, just not as giant, right? Much better beer than Carlsberg, by the way.
Good to know.
We're gonna get crap in the comments for this. But so Tuborg every year, they have a rule that they try not to have a profit at the end of the year.
Yeah.
So what they do is they will look at it when they do their tax planning, and I don't know if they still do it this way, but they used to when I was a kid and lived there. They would take anything that they could foresee was going to become a profit, and they would dump it back into the community.
Yeah.
So they would go and sponsor events, and they literally didn't want the profits. They wanted the profits to benefit the people.
Yeah. Otherwise,
around.
it goes to the tax man.
Correct.
Yeah.
So like you kind of have to think the same way is like, how do you divert or delay having to pay taxes a lot of times, right? Like this is why a good financial advisor will explain to you as a business owner, like where can you put money now where you don't get taxed on it now, but you get taxed on it when you retire and have less of an income.
Right.
Right. So you're just taking your money's making you more money so that when you need it, when you have less income, then you can access it. Right. So delayed taxation.
Yeah.
Like, but this is what a lot of, and we've had this conversation before, like, this is the part that so many business owners don't think about.
No,
right?
they
Like
don't know.
they just get a $20,000 tax bill and go, man, Uncle Sam's taking everything. And I'm like, well, you could have made Uncle Sam take 90% less if you would have just planned accordingly, but you didn't. But yeah.
And that's what happens. All right. So yeah, Greenstone Ranch.
I feel like I'm mad at people today.
Because we're tired. I look, man. I would highly suggest go talk to a tax strategy. Go to a tax strategist, a CPA. I'm not sure where you're getting your taxes done. It does not sound like you're talking to someone who plans for taxes. You're talking to someone who just does your taxes.
Yep.
You might even do it yourself. You might be using TurboTax or something like that.
Don't do that.
Which again is great if you just have a W-2.
Yeah.
But if you're talking about business income and things like that, go talk to a tax strategist.
Yeah.
You absolutely need that.
And for right now, file whatever return you have. Once you talk to someone that knows what they're doing, they may be able to file an amended return for you.
Oh yeah.
And you'll get some of that money back.
Yeah, very much so. I've always been, and I'll say this, the last thing I'll say this, I've always been, and it's always been proven true to me that I've always been under the impression that a good tax attorney, a good tax strategist, a CPA to do your taxes will save you more money than what you pay them.
I always say it's my best investment of the year.
It really is.
She always saves me more money than whatever I have to pay her.
Yeah, exactly.
Like by a lot.
Yeah.
Remember that if you have questions or comments, please drop them below and we will prioritize actually answering the questions on these videos.